Good morning, everyone. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, bringing you the morning comment for the 7th of January. Fed minutes. For some members, the hike was a close call. Fed officials decided unanimously to raise interest rates in December after almost a decade, but the minutes of the meeting revealed that for some officials, the decision to hike was a close call. The concerns arose from the low inflation that needs to be closely monitored. The debate over the outlook for inflation will be crucial to determine the future path of rate increases. Fed officials generally expect 4 more rate hikes this year, compared to current market expectations of just 2. Officials in recent days have emphasized that they could lift interest rates 4 times this year, despite the stock market decline in the early days of the year. If the inflation data going forwards begins to improve, the market will have to reprice the number of rate hikes, which leaves room for the dollar to appreciate further. Still, FOMC members pointed to factors that could throw their inflation outlook off course. Further declines in oil and other commodity prices, as well as a strong dollar, impose important downside risks to the inflation outlook. Overall, the message from the minutes was that if the economy disappoints, the Fed could hold off on rate increases. Likewise, it could accelerate the pace of hikes if the economy surprises with a rise in inflation and strong growth. The dollar remains data-driven, and positive US data are needed to keep it in a bullish trend. Elsewhere, Chinese stock markets stopped trading about 30 minutes after opening. Even though China's stock market regulators announced new rules to restrict major shareholders of listed companies to sell their shares, this was not enough to stabilize the markets. Chinese stock markets plunged more than 7%, triggering an automatic halt to trading for the second time in 4 days. Spillover effects into other equity markets are likely, which could see funding currencies such as yen, euro, and Swiss franc outpacing their counterparts. As for today, Eurozone's retail sales for December, a closely watched measure of household confidence, are forecast to have rebounded on a monthly basis after falling for the previous 2 months. The expected rise in the figure is likely to be due to seasonal factors as a result of increased shopping during the holidays. The bloc's unemployment rate for the same month is forecast to have remained unchanged at 10.7%. Final consumer confidence for December as well is expected to confirm its preliminary reading, though this indicator is usually not a major market mover. Net-net, the market may pay more attention to retail sales, which could prove euro positive, at least at the release. From the US, initial jobless claims for the week ended on the 1st of January are forecast to have decreased from the previous week. Even though this indicator is usually not a major market mover, just 1 day ahead of the US employment report for December, it may attract more attention than usual, especially following the solid ADP employment report on Wednesday. This could support the dollar further. The Canadian IV PMI for November is also due to be released, but no forecast is available. Given that the RBC manufacturing PMI for the same month declined, we see a strong possibility for the IV index to follow suit, which could weaken Canadian dollar a bit, at least temporarily. We have 3 speakers scheduled on Thursday's agenda: Bank of Canada Governor Stephen Poloz, Richmond Fed President Geoffrey Laker, and Chicago Fed President Charles Evans speak during the day. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade delivered directly to you. And also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, wishing you solid trading.